Inflation is here. Did you see that coming? Oh, it's a bit concerning for people who work like crazy to earn some cash. For 6 months in a row, prices increased across many sectors, including food, housing, and even gas. According to the Bureau of Labor Statistics, the US inflation rate has increased to 6.8% over the last year to its highest peak since 1982. We all know that inflation decreases the purchasing power of our money, right? But before you smirk and roll your eyes, know that this is not only happening in the US. Governments out there are printing bills like crazy, diluting your wealth, and society is on the edge of financial collapse. Welcome to Action versus Motivation, where future billionaires come to get motivated. So, in this video, we'll be going through the top 15 assets that will give you a better investment than holding cash. Hopefully, this will help you prepare for what's coming next. By the end of it, you'll only keep your dollar bills for essentials and reinvest everything. Let's start. Number 15. Cash. Cash is absolutely the worst asset to hold right now. You're better off trading all your cash for clothes and cars than keeping it in a savings account. When the population loses confidence in its monetary system, it rushes to alternatives. It is the reason why baseball cards are coming back. Pokemon cards are worth hundreds of thousands of dollars now. People would buy land in the metaverse than hold cash. Anything with a credible fan base can be used as a store of value. We are on the brink of a significant change regarding money. Unfortunately, these drastic changes will impact the poorest and least educated. These people were told to save their money and keep it hidden for rainy days, while nobody said that their money would be worthless when the rain started pouring. Find a good timing to exit your cash and purchase something of worth that will still be valuable years from now. What's it going to be? What store of value will you use to protect your wealth? Let us know in the comments below. Number 14. Raw materials. We briefly touched on real estate, land, and precious metals. Still, raw materials, especially those used in construction, are incredibly hot right now. On average, you'll pay roughly 18% more for raw materials, while production costs have remained approximately the same. You can take advantage of these changes in the market by investing in material stocks. SLVM, FCX, and AA are just three that are currently the talk of the town. Number 13. Vintage cars. It's fantastic what Tesla Model X represents for the industry, but one thing we hate from an investment point of view is luxury tech. Nobody cares if you now have a gold-plated iPhone 13. It simply doesn't age well. From wine to unique cars, these either go up in value or depreciate a lot slower. This is why the G-Wagon costs so damn much. While your Toyota will be worth 50% less 2 years from now, the G-Wagon on average depreciates only 5% per year. On the other hand, the price of a good edition Ferrari historically goes up 8% year over year. Suppose you can afford to buy an already vintage one with some rarity in its supply. That percentage will shoot up. Breaking it all down, it's no surprise the most expensive car in the world is a Ferrari 250 GTO worth over $50 million. Number 12. Luxury handbags. Yes, you heard it right. It's luxury bag. Ladies were right to ask for a Birkin or a Kelly bag. It's not just because of the flex power, but they're authentic long-term investments. Yup, luxury handbags go up in value over time, but they're not all designed equally. The connoisseur ladies treat their bag collection the same way your stock portfolio. Pick the right ones and hold on for dear life. So, here's the holy trinity of luxury bags. The price for the premium Birkin bags has increased 14% per year for the past 35 years. Some of these bags go for $250,000 to $500,000. If you can't afford to spend $10,000 to $30,000 for the cheaper ones, the Chanel Classic Flap Bag or the Louis Vuitton Never Full are more affordable options that hold value. Number 11. Luxury watches. People nowadays use their smartphones to look at the time. Watches are not really a priority for most people, but the rich ones understand something the rest of the population doesn't. There's a threshold where a particular category of products goes up in value over time, and that includes watches. This is due to the craftsmanship, heritage, and scarcity of the product. It's what we call limited edition. The intrinsic value of the watch keeps up with the inflation with its monetary value, and the prices will go up in time. Let's Let's take a look at Rolex. From 1957 to 2014, that's the fastest data we could find. Luxury watches hold value over time. The top 3 best luxury watches for investments right now are Rolex Submariner, Patek Philippe Nautilus, and Audemars Piguet Royal Oak. Number 10. Art. Art is the soul of an artist. That is why you can't imagine why people spend a ridiculous sum of money for an art. Do you really understand why rich people pay for paintings you think your child could make? Or maybe you're into exotic black canvases by Rothko. Well, the rich use these as stores of value because the price of art never goes down. You purchase it for $1 million. The purchasing influence of the dollar goes down by 50%, so you'll only sell it if the price is above $2 million. Art has continued the least regulated corner of wealth because the rich defend it with their capital. According to statistics, you're better off investing in art than the S&P 500. Maybe you don't have millions of dollars to buy yourself one of these incredibly expensive paintings, but now there are solutions available. Platforms like Masterworks.io allow regular people to invest in big art through fractional ownership. Basically, thousands of people come in to buy a curated piece of art and share the proceeds of the sales a few years into the future. This is the future of art investing. Number 9. Livestock. You wouldn't want to miss this one. Pigs, cows, sheep, and chickens are a better investment than the US dollar. Yes, you heard it. It's even better than gold and silver. It is true, specifically in developing countries where the demand for livestock is higher than cash. Because no matter how you try, you cannot milk a dollar bill. You might think that this is a joke, but even the demand and price for compost outperformed the US dollar by a lot. With everything happening in micro farming today and the increase in demand for premium cattle such as Black Angus, livestock might be the start of your journey to become a millionaire or even a billionaire. Number 8. Gold, silver, and platinum. Most people are not a big fan of metals, right? We hear you. We understand how appealing gold and silver are as stores of value, but it's not for most of us. That doesn't mean that holding cash is a better option in a context like the one we're in right now. With cash funds being such an inflationary investment constantly diluted, almost anything of limited supply is better. Do you want to glimpse something fantastic? With blue, you have the purchasing power of the US dollar. And with gold, you have gold. Gold is up 50% in the last 5 years alone. It's approximately the same as every other precious metal. Suppose you completely distrust technology or anything else that's more complicated from a financial perspective. In that case, you could always step into any bank and buy yourself gold bars. Number 7. NFTs. If you think NFTs are just a computerized form of art, well, you are wrong. NFTs are more than digital art. NFTs are digital ownership. You can finally prove you own something on the internet without having to sue someone. You all don't understand just how big of a deal NFTs are. Yes, early on, buying a Bored Ape or a CryptoPunk would have resulted in massive financial gains. But the applications will extend beyond art. 10 years from now, instead of getting paper documents when buying a piece of land, you will buy the NFT for that land. It can't be destroyed or ripped off by anyone, unlike paper documents. You will be able to fractionally fund properties anywhere around the world and get paid your share of the rent they generate. We have been invited to Dubai to invest in the largest tokenized real estate project to date. This is happening right now, people. Every piece of content used commercially will provide you with 100% transparent royalties for generations. NFTs will do to property rights what YouTube did to video, but the power is with you this time. Number 6. Altcoins. Altcoins at this moment are everything serious in the crypto world. We're seeing new companies arise in this new blockchain world, offering many services to the new market. The same thing happened when the internet began going mainstream. Altcoins are the Googles, the Amazons, the Facebooks, the Yahoos, and more of this contemporary technology. You're getting the option to invest in these companies early, something you couldn't do when Google, for example, was being founded. Our top picks outside of Bitcoin are Ethereum, Cardano, Chainlink, Teller, Polkadot, and everything Sam Bankman is invested in FTT, Solana, and more. Bitcoin serves the role of a store of value. These projects are part of the infrastructure of the new internet. This is why we're considering evolving Bitcoin essentials into blockchain mastery, or even into something that covers the entire industry called Crypto Complete that's being consistently updated. The financial world as we know it right now will become a mere subset of the crypto industry. This is not financial advice, folks. We're just sharing what we're investing investing in. Number 5. Bitcoin. Bitcoin is the king of all against inflation. By far, it is the absolute best performing asset of the past decade. The US dollar has lost 99.9% of its value against Bitcoin for the past 10 years. It is the purchasing power of the US dollar against Bitcoin for the past 5 years alone. We are firm believers in digital currencies, so here's what we think will happen soon. It won't be long until the US ultimately moves from fiat to a digital dollar, and other countries will follow along. The top 10 biggest economies will face each issue with their digital currencies. Bitcoin is digital gold and will exist alongside these digital currencies as an actual store of value if you think your government is diluting your wealth. In that case, you will switch your holdings from digital currency to Bitcoin in your wallet and hold onto it that way. This will be a much more transparent and effective way to manage your funds in the future. Every billion-dollar institution knows this already. They are patiently waiting for a spot Bitcoin ETF to be approved in the US. When this happens, every primary business in the United States will convert a portion of their balance sheet to Bitcoin to ensure a diversified portfolio. Since Bitcoin has a limited supply, there will never be more than 21 million Bitcoins in circulation. Laws of supply and demand come into play. A lot of demand for a limited supply will shoot the prices up. That's why high-profile hedge funds like ARK Investments see Bitcoin valued at over $500,000 per coin. Bitcoin is the ultimate store of value and wealth protection. Number 4. Swiss francs or other superior currencies. It's surprising to us how uneasy the US population is when using different currencies. Through a ton of marketing measures, for some reason, they are convinced that the US dollar is the #1 currency in power and value. Unfortunately, that hasn't been the case for decades, but the fantasy continues. There are plenty of other stronger currencies out there. Still, the US dollar has also been one of the most diluted, distributed, and neglected currencies of all. The US has been printing and shipping containers filled with US dollars to the Middle East while keeping a strategic position there. They printed additional money and flew it in cargo planes whenever they needed to buy some political force. When your government is corrupting other governments with cash, maybe it's time for us to look to other currencies. One of the best options is the Swiss francs. They have unpegged their currency from every additional money out there and backed by tangible assets like gold, land, real estate, raw materials, and more. The euro and the British pound, out of the three, only the Swiss franc has prioritized tackling inflation by not printing more money. While the US, Asia, and most of Europe deal with double-digit inflation, Switzerland managed to keep it under 1%. It would be best to never bet against the Swiss when it comes to money. Number 3. Land. If there's one genuinely scarce resource, it is the land on Earth. We know precisely how much livable land there is. Even if we were to build artificial islands as they did in the Maldives or Dubai, that would be a lot of money. The US Department of Agriculture said that the prices for agricultural land have gone up by 7% over the last 12 months. They've been going up since 2007. Land is in high demand since the entire world has drastically changed. Do you know why? Historically, we've been hooked to the workplace. First the farm, then the factory, and the office. For the first time in history, this chain has finally been broken. People now discover they can work from absolutely anywhere. Why spend 100 times the amount of money to buy land in the suburbs when you can go 30 minutes out and get yourself a deal? With all the off-the-grid tech innovation happening in the market, you're free to live, work, and move wherever you want. The land is likely one of the best investments for the next 50 years. Number 2. Stocks. Did you notice how the stock market is at an all-time high? So the government prints money like crazy. It deploys it into the economy and people buy products and services. That money ends up in the top 20% of the population. The same way the stimulus assessments double Jeff Bezos' wealth as you spend it buying stuff from Amazon. Because the rich understand the dilution of capital, they don't care about saving money under the mattress. So they buy stocks or preferably index funds such as S&P 500. All this new capital filled the stock market, firing everything to the moon. Every dollar in the S&P 500 doubled in value over the last 16 months. Over 50% of the US population has assets that can be invested. The wealthiest 10% of the US population now own almost 90% of all US stocks. This is why rich people are getting richer, while the poor keep holding on to cash for life as the rich park it in luxurious stuff that appreciates over time. Before we proceed to the top 1, if you haven't subscribed yet, you are missing out. Subscribe now for more videos that could help you in your journey as a future billionaire and help other people by sharing this. Number 1. Real estate. Real estate won the top spot for the best asset, better than our dollar bills. Yup, it's definitely real estate. Prices are going up now. Here's the reason why. People understand what printing money out of thin air does to the economy, so they look for investments considered vital stores of value. Real estate is by far the best store of value we've had until now. But here's something most people don't realize. The value of your home does not increase. It's not like overnight something of value pops up. It's the purchasing power of the currency that's going down. So it would be best if you had more cash to buy the same thing. Zillow, the largest real estate marketplace in the US, noticed the average home price in the US double in the last 5 years, and the tempo of price increase is only picking up. The average price increased by 18% over the previous 12 months, and their data indicates a future growth of 13% moving forward. Considering the rise in raw materials prices, we expect the price for new apartments to be considerably higher than they are now. At this rate, saving up to purchase a house is one of the most expensive things you can do. For those who stick around until the end of this video, we hope you grasp something that could help you in your financial journey. It is certainly not easy, but financial decisions must be made with care. If you like this video, hit the like button and don't forget to share it with your friends. See you at our next video.